What happens when the most powerful man in the world takes on the most powerful bank in the world? I'm diving into everything that's currently going on between Donald Trump and the Federal Reserve and what this means for you and your wallet for the next couple of years. But before we dive into that, my name is Tiffany. I'm a loan officer here in Las Vegas, Nevada. I've helped over 200 families with their real estate needs and would love to help you with yours. This includes things such as buying a home, refinancing a home, maybe taking out some equity, whatever that need may be. I'm here to help you. So I'm going to leave my information in the description below so we can connect and see how I can best serve you. As well, this is a growing channel and I greatly appreciate everyone who has been liking the stuff that I've been putting out. Maybe you've subscribed here recently, maybe you've shared my video with someone who might find this information interesting. So I greatly appreciate everyone who's been supporting, and kindly ask if you are new here or if you are maybe watching my videos for the first time, I would love for you to subscribe, maybe give this video a like if you find this information helpful by the end, and share it with someone who also might find it helpful. But without further ado, let's get into today's video. Before we get into all of the drama that's going on with Donald Trump and the Federal Reserve, let's take it way back and let's actually talk about the role of the Federal Reserve in the US economy, because I feel like not a lot of people really understand what the Fed is doing when they hear that interest rates are moving one way or the other. If you don't know, the Federal Reserve is the central bank in the United States and it controls basically how is the economy doing in the United States. Basically, they take a look at a bunch of different reports that are coming out monthly about, where are jobs at, where is GDP at, where's unemployment at, all these things. And they basically gauge from all of these reports, hey, where is the economy at? Are we going upwards? Are we going downwards? Are we moving just like this? The role of the Federal Reserve is to help make sure that the economy stays strong. So any sharp motions one way or the other, the Fed is trying to basically avoid those. Back in 2020, when things were going really downhill, like people were really scared to spend money, it was the beginning of the COVID outbreak, so people weren't out as much, tourism was way down, so by large means, there was a big chance that if the Fed didn't step in to resolve something, that we could have gone into a depression at that time. So that's when you saw the Fed lower their interest rates to essentially zero, meaning that it costs almost nothing to borrow from the Fed. Now, it's not like you and I get to just borrow directly from the Fed. That's not quite how it works. When we're talking about the Fed and their interest rate, we're talking about something called the federal funds rate. And this is a rate at which banks borrow from the Fed. Without getting too into the whole banking system as a whole, what you should know is that a lot of times banks do not actually have the money that they say that they have on hand. A lot of times, like let's just say we're talking about $1 billion bank. They don't have $1 billion at whim to just loan out to people. Based on the deposits that their members have, they should have that $1 billion. So where does that money go? That money is being lent out to other members who need, let's just say, auto loans, they need credit cards, they need personal loans. And that is how a bank really makes money. They go and they take the money that they have from their depositors and they go and lend that out. As you know, it never just stops there, because if there is only so many funds that are being put in by depositors, then there is a cap to how much that bank can actually make. Obviously, a bank doesn't want to limit itself on how much business it can generate. They're always looking to lend money. At that point, that bank goes to either the Fed or they go to another bank and they ask for money. At that point, the bank is borrowing from the Fed in order to make business run as usual and to get more business on the lending side. That impacts things like credit cards, if you have a HELOC on your house, if you have an auto loan. That is basically the thing that's most directly impacted by the Federal Reserve when they're lowering or increasing their interest rate. Like I mentioned before, the Fed basically uses their interest rate, the federal funds rate, in order to pull the economy back or put some gas on the fire, basically. If the economy is doing really poorly, like it was in 2020, they'll lower interest rates in order to incentivize people to go out and take out money and help generate business and put more money into the economy. When things are looking really bad, which is what happened at the end of 2022 going into 2023, and we have too much money in our system and inflation is starting to become a problem, then the only real thing that the Fed has control over is to raise interest rates and to make money unaffordable to people. If you're still taking out money from a credit card, you're going to be paying way more than had you taken out that credit card in 2020 when rates were essentially zero from the Fed. So that is how the Fed really controls the economy. So they know that if people want to keep borrowing money from their banks, then it's going to cost them more to do so because they're trying to weed people out. They're trying to get less money into the economy. Then at that point, the inflation that we're currently battling with, which was rampant, especially in 2023, is finally getting it, reined in, and we're not going to see huge growth over, 5 years, and things are completely unaffordable for the average person. So that is pretty much how the Fed works. Agency is not technically a part of the government, but it is a government agency in the sense that everything has to work together in order to make the economy and the government and everyone play nice basically together. But they aren't actually directly tied to, like, let's just say Donald Trump or the government, basically meaning that even though, there is some commonality there, they don't have to fall in line with what Donald Trump wants. They can actually do what they wish because they are an independent government agency, which has its pros and cons, and we'll talk about that a little bit later down the line, especially as we get into the drama between Donald Trump and the Fed. It's important to note that this agency is independent, so they don't have to react in the way that Donald Trump wants them to. Ultimately, their job is to make the economy strong and keep, everything in check. You wouldn't really want the president to have that as, his manipulation tool. Like other countries, it's not even an American thing. Other countries also don't have their, reigning president, whatever that looks like. They usually don't also have control of the central bank of that country for that reason, so that things don't get skewed and that things aren't easily manipulated. But that is easier said than done, especially if you have a president who wants to control the narrative of what's going on in his presidency. So let's introduce a key player here, and his name is Jerome Powell. Jerome Powell is the current chairperson of the Federal Reserve. I don't know if you guys have ever seen the Lorax, but you know how the Lorax, he's like, I speak for the trees.
And who are you? What? I'm the Lorax, guardian of the forest. I speak for the trees.
Jerome Powell speaks for what the Fed ends up doing with interest rates cut. They basically meet every month and they decide what are they going to do with interest rates based on the reports like I mentioned earlier, like, unemployment, where's GDP, where all these random reports like agriculture and stuff, like what are those reports showing as far as the American economy? And what should we do as a result? Should we lower interest rates? Should we raise interest rates? Should we do nothing? Whenever these meetings happen, there's one person who speaks for the whole group, and they basically give the decision, hey, this is what we're going to do with interest rates at this meeting. And that person currently is Jerome Powell. And he's usually seen as, basically the Fed, because he's the only speaking piece of the people who are making that decision each meeting. And he actually has a lot of power in the sense that he has a big opinion on what the Fed ends up doing because he is the chairperson. Now, there is a little bit of messiness here because Jerome Powell was actually picked by Donald Trump. So even though the Federal Reserve is an independent agency, they are still picked by the president. So to some degree, there is that level of, you want to appease what the president wants, but also too, you have to act in the best interest of the country. So that's where Jerome Powell is currently finding himself. And what we're currently seeing is a battle for the ages. So let's dive into the drama that's currently going on between Jerome Powell and Donald Trump, because that is truly the big story here, is that these two just cannot seem to get along or see eye to eye on how we should move forward with the economy. Now, as you may recall from an earlier video I did, or even just the news itself, Donald Trump's major promise during his campaign was the fact that he wanted to make interest rates more affordable. In fact, even saying he wanted to get back to pandemic levels, which is widely unheard of. Basically, his big concern was making America more affordable and relying less on, foreign nations and bringing that pretty much in-house so that Americans can benefit from, the sale and good of stuff. That was a big concern for Donald Trump, and he knows that in order for him to really capture America's trust, he pretty much has to do this quicker rather than later. He knows that he can't just go around making empty promises because, as we saw with the Biden administration, when you don't keep your promises, that comes back to bite you later down the end. And we're going to talk about why that timing is kind of important for Donald Trump, especially as we're going into the next year. A big thing for Donald Trump is the fact that he wants to make America more affordable again, and he's been trying basically with different tactics to force the Federal Reserve to bring interest rates down. There's a lot of speculation that the tariffs that he was putting in place was to force prices to go up, force people to spend less, which would cause the Federal Reserve to have more confidence in lowering interest rates. But so far, that doesn't really seem to be taking effect. And I think what we're seeing more is people just scared, but you're still seeing spending pretty much the same as it was before. We still have a pretty strong job market. There's still really good reports with unemployment. So for all intents and purposes, the Fed doesn't have a reason to lower interest rates. If the tariffs end up going into place and prices do increase, then what we're going to see is probably a shorthand trade-off where things start getting way more affordable. So it might make more sense for us to just hold on the interest rate cuts and wait in to see what happens with tariffs. And that's exactly what Jerome Powell is currently doing. In an interview, Jerome Powell talked about how if Trump's tariff policies remain in place, they were likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment, which would cause them to actually raise interest rates and not lower. The Federal Reserve is taking a very slow and steady, cautious approach to how they decide to move forward. And this isn't brand new. This is what they've been saying since Biden was president, when 2023 happened and there was a huge jump in interest rates at the beginning of the year. Like, we came back from Christmas break and bam, there's a ton of movement happening in the bond market causing interest rates to go up. This has been their game. They've been talking, since last year, since Donald Trump got elected, that, we're really not in any rush to lower interest rates because we need to see what happens with this economy. We, unfortunately made the mistake of not raising interest rates sooner than we should have. So we're definitely not going to be in a rush to lower interest rates now. That is pretty much where the Fed is at. But this isn't good for Donald Trump. And this has resulted in a lot of name calling and a lot of basically scare tactics from the president to Jerome Powell. In fact, Trump recently said after the most recent Federal Reserve meeting that talking to Fed boss Jerome Powell is like talking to a wall, and that he calls him a major loser and Mr. Too Late, and that he's calling on the Fed to lower interest rates preemptively, and it's even talked about firing him, which is actually not possible. We'll get into that a little bit later. But basically, Donald Trump is doing what he does best. He does tend to use this kind of bully tactic in order to get people to do as he wishes. For the most part, this is working for a lot of people, but it's not working with Jerome Powell. And that is the thing that is driving Donald Trump crazy, because he doesn't have control of what the Fed is doing with the federal funds rate. As I mentioned, Donald Trump has kind of teased at the fact that he might fire Jerome Powell, but first of all, he doesn't have the authority to do so because the Fed is an independent agency. And also too, Jerome Powell's term ends in May of 2026. So exactly a year from now, he's not even going to be the chairman anymore. So it really wouldn't make sense for Donald Trump to do something quicker to Jerome Powell's position, just because in a year he gets to choose a new person anyway. So it doesn't make sense for him to do anything with Jerome Powell now. But basically what I think you're seeing is Donald Trump basically trying to force Jerome Powell into a corner and basically tease him, like, calling him names, you're saying he might get fired, all of these things. He's trying to bully Jerome Powell into doing what he wants. And so far, it's not working for him. Now, the big question you may be asking yourself is, why is Donald Trump in such a rush to lower interest rates? He did campaign on the promise of making America more affordable. By all intents and purposes, he's only been in office for about 100 and some days. So the fact that he's trying to make this much progress in such a short time frame really is telling you a story without telling you a story. And that is because right now Donald Trump has it on easy street. He's got Congress, he's got the White House, he's got the Supreme Court. So by all intents and purposes, he should be able to go in and steamroll and get what he wants. And that's pretty much how he's operated his first 100 and something days as president. He's gone in and enacted all these tariffs, he's gone in and acted, new changes in Congress, he just released his big beautiful bill. He is for the most part getting his way. And so with him not getting his way with the Federal Reserve, it is just a pain point in the story for him of the campaign promises that he's made to his constituents. And I think it's twofold. One, like I mentioned earlier at the beginning of this video, people tend to not react kindly if you make promises and don't fulfill on them. Think about the last presidency with Joe Biden. His big campaign promise was about student loans and having them forgiven. Now, whether you agree with it or not, that was the big promise that he said he was going to come in and solve for people. And he didn't fulfill on it. And we saw how that really hurt the Democratic Party as they went in for the re-election, that they got completely destroyed in all categories. When it came to the president, it was a landslide for Donald Trump. With Congress, he lost positions. They didn't really have any open positions for the Supreme Court, but basically with those two pieces in place, this is a Republican-dominated government that we're seeing right now. And it's because Donald Trump, in addition to some other promises that he made, and then obviously the fact that he wasn't the one running for president later down the line, it was Kamala Harris, I think all of that led to basically a loss of confidence from the Democratic Party and from people who were basically on the line, on the middle, and they were like, you know what, they can't fulfill. So naturally we need to go find someone who can fulfill. And so Donald Trump has a very big task at hand because he needs to basically accomplish what he said he was going to in order to keep the confidence that he has from his own party and from people who are on the middle. Which leads me into the second reason why he needs to do that sooner rather than later. And that's because midterms are right around the corner, which I know, we just got over the election, so how are midterms already right here? If you don't know, basically in November of next year, the midterm elections are coming up, and the sentiment that people are having about certain parties is starting to be formed now. You're starting to see people who are basically waving their hands saying, hey, I'm interested in running for this congressional race. I'm interested in, shaking up the seats in Congress. If Donald Trump is not able to fulfill and the Republican Party is not able to fulfill when they have such a stacked government, this could lead to a loss of confidence from people who are going into the midterm elections undecided. And again, like we saw with the Biden administration, if you lose that confidence, it's very hard to gain it back, and people will turn their backs on you. I think this is twofold for Donald Trump. He really does need to get that confidence back from the general public, because that is dwindling as his presidency goes on. But also too, in order to not shoot the Republican Party in the foot when it comes to midterms, he needs to basically be showing that he is fulfilling on the promises that him and the other Republican Party Congress members have made. Now, I think another thing that's playing a factor into Donald Trump wanting to make a move sooner rather than later is the fact that a lot of other countries are actually already starting to make these changes themselves. In fact, the European Central Bank cut interest rates last month, citing concerns about the economy due to trade tensions, and the Bank of England is widely expected to take a similar step this week. Another report also talks about how the Chinese government recently lowered their interest rates, and this actually comes from Donald Trump talking to, a reporter after the Fed decided not to cut interest rates this last month. Now, if the chairman of the Fed, if he would lower interest rates like China did, like I think the UK did, but like numerous other countries have done, it would be like, it's like jet fuel, but he doesn't want to do it. I think he doesn't want to do it probably because he's not in love with me. I think that's sort of a crazy reason, but that's the way life is. So he's chalking this up basically like Jerome Powell doesn't really like me, so he doesn't want to do what I want to do, when I think it goes a lot deeper than that. But Donald Trump sees the writing on the wall. If all these other countries are starting to lower their interest rates and their banking systems and their economies are starting to get back to normal, then why isn't the American government doing the same? And this is a good question, and especially as I mentioned before, he's losing confidence with the general public as the months go on and people aren't really feeling a change in their pocketbooks when they go pay their bills, when they go to the grocery store. So he knows that he needs to basically gain the confidence and keep the confidence of the American public in order to ensure that his reign is successful and it's fruitful. This isn't resulting in an eye-to-eye, conflict resolution when it comes to Donald Trump and the Fed. And because the Fed is the pain point that's in the way of Donald Trump getting what he really wants, obviously he's going to continue this fight with Jerome Powell and basically do whatever he can in order to force interest rates down, which is what we're pretty much seeing right now. He's trying to bully, again, Jerome Powell into a corner in order to do as he wants. But this actually has no effect on Jerome Powell at all. In fact, he told reporters pretty much whenever they announced that they weren't going to do a rate cut this month, it doesn't affect our job at all. We're always going to consider only the economic data, the outlook, the balance of risk, and that's it. That's all we are going to consider. And another note that they made, that the US Central Bank has warned that Donald Trump's tariffs have created so much uncertainty that it is unsure what to do with interest rates. The Federal Reserve announced on Wednesday it would keep interest rates unchanged despite pressure from Trump to lower borrowing costs. But Fed Chairman Jerome Powell said that the economic fallout from Trump's tariffs meant that it was not all clear what the bank should do next. The decision marked the third in a row without action, leaving the bank's key lending rate hovering around 4.3%. Basically, the Federal Reserve is taking this wait-and-see approach, which is not the approach that Donald Trump wishes that the Fed would take. That is the current drama at hand, is, who is going to win basically in this game of chicken? Is it going to be Donald Trump and doing what he can to keep the general public in his favor? Or is it Jerome Powell and the banking system and keeping the economy in check with where it needs to be? That is it for today's video. I'm just going to give you some final thoughts because obviously there is a lot discussed here. And, I think it's easy to say, of course, we want Donald Trump to win this because everyone wants lower interest rates right now. And it would definitely help my business if interest rates were lowered. And I think just the prices that we're paying on goods and, all this tariff talk, it doesn't seem like things are getting more affordable anytime soon. And I think more people would obviously want that to be the case. But I do think that the Fed is taking the right approach here when it comes to interest rates, because again, we don't know what's going to happen with all this tariff conversation. I mean, things change literally by the minute with the tariff conversation, and that has the capability of causing a lot of distress when it comes to people who rely on foreign goods, especially if you're from China. Now, luckily, we got the tariff down from like 145% to like 30%, but that's still going to affect people, and especially small businesses here in America that rely on foreign made goods to sell, like in their stores or in their, boutiques and all of these things. If you rely on that foreign good, you're going to see a 30% increase. So is it going to be a 30% increase now that's passed off to the consumer? Is it going to be like a 50 to 60% increase that's going to get passed down to the consumer? There's so much at hand here that we can't quite figure out the details because we haven't seen the result of these actions being taken. With that being said, I do think the Fed is taking the right approach here, although it would be great if interest rates were lowered. Like I said, for my business, for the economy at large, to people feeling good about spending money, like it would help a lot of people if interest rates were lowered. Is that the right approach for the time that we're currently in? Only time will tell.